how's it going? It's Dan Russo, Chief Market Strategist at Chaikin Analytics, coming to you on Tuesday, late morning, early afternoon at this point, December 1st. Wanted to hit you with some updated thoughts. Haven't been here in a while, kind of took last week off, wound it down into the Thanksgiving holiday. But I wanted to come back with kind of what I'm looking at, what I'm focused on in the final month of the year. Both myself and Mark Chaikin have been writing recently about how we see prospects for a rally in the equity market into the end of the year. What I think is interesting is we have the SPY trading at or near all-time highs. We have IWM trading at or near all-time highs, and it's really the Qs that have been the laggard as there's been this rotation out of mega cap tech and into more cyclical and value areas of the market, as well as smaller caps. And I really want to make the distinction here that it's mega cap tech. It is not tech. It is not a rotation from tech. I started writing about it last week. I wrote about it again today. If you look at the technology sector on an equally weighted basis for the S&P 500, so take XLK, which is cap weighted, and then equally weighted, on an equally weighted basis, it's trading at an all-time high. If you look at small cap tech, there's an ETF that tracks it, trading at an all-time high. And both on an equal weight and small cap tech are outperforming the S&P 500. So I want to be really clear here that it's not a rotation out of technology. It is a rotation out of mega cap into smaller cap, right? Small cap growth is outperforming. Mid cap growth is outperforming, right? So it's more of a mega cap rotation. It's not so much a sector rotation, in my opinion. But now what's kind of interesting and what's happening intraday today is the Qs are on the verge of making a new high as well. So think about what that means from a breadth perspective. If all three major market ETFs are trading at all-time highs, if the number of stocks that are participating in the rally is continuing to expand, that tells me that we're likely to continue to rally. All right, look around the world. Look at the different country ETFs. There are 48 different country ETFs that I track on a daily basis. All 48 of them are trading above their 200-day moving averages. They're all in long-term uptrends, right? So the breadth picture for equities as an asset class is compelling. What I think is happening is I think money is flowing out of treasuries. You can see TLT on the chart behind me trading lower. And I think money is flowing out of gold. Money is flowing out of low yielding treasuries and zero yielding gold and into the equity market. So I think that is the rotation that's playing out. I think that is the rotation that is not getting as much press as, well, it's a rotation out of tech. I think that's an easy comment to make. I think it's an easy headline to write to get clicks, but it's disingenuous, and quite frankly, it's wrong. So anybody who's saying it's a rotation from tech is wrong, quite frankly. And I very rarely come out and say things that are that bold, but I'm going to say it here because it's true. They're wrong. So those are my updated thoughts here. Basically what we've been writing is we see prospects and see scope for a rally into the end of the year and beyond. As a matter of fact, I've started looking at extension levels on SPY to the upside. And my view in the here and now is that as long as SPY is above 340, you have to be playing for about 413. So if you're looking at the S&P 500 index, that's 4130 as potential upside. Not to the end of the year, but just on this move higher, on within this uptrend or this leg of the uptrend. Above 340 SPY, we're playing for 413. So hope everybody had a great Thanksgiving, and we'll be back to you soon with some updated thoughts. Be well, be safe. We'll talk to you soon.